All right, crypto folks, the mighty Jerome Powell has finally done it. Some of you said he wasn't going to do it just to spite Trump, but he did it. He cut 25 basis points. And more importantly, he said he was open to 2 more cuts by the end of the year. Now, the Trump Fed governor, the latest one appointed, actually wanted 4 more rate cuts by the end of this year, but even the other 2 Trump appointees weren't that crazy, and they were fine with the 25 basis point cut. The dovish stance he took on after cutting 25 basis points and signaling 2 more cuts is actually more important than the cut itself. Mainly because the markets have already priced in the cut. The chance of him cutting was like 95 to 100% even before he cut, and that's why the markets really didn't respond. Yes, some people came onto the stream like, oh, why are we dumping when we got into like 115.2? But that's kind of ridiculous because, a movement of less than 1% is not a dump. Yes, there was a pre-pump yesterday night up to about 117, but then people just sold those profits, and Powell did exactly as expected because Powell and the Fed is very, very good at doing exactly what's expected. They are not in the business of scaring or surprising people with moves. Now, obviously, I think they are going to have 2 more cuts because the only thing that could stop the 2 more cuts is the CPI being really bad, which is possible, or essentially labor market being very, very strong towards the end of the year, which I don't think is possible because I don't think the companies are going to hire because they don't really know what's going on with the tariffs, and there's uncertainty, and tariffs are making price go up, so they have to cut their workforce to actually make up and keep prices down. At least some of the companies, the others will just raise their prices, which will actually result in a slowdown of the economy. And basically, a lot of government workers got fired, and they don't really have jobs to go to. And plus, AI is starting to kick in and get people and basically obsolete people out of jobs. So, don't really think the hiring numbers are going to really be all that great the rest of this year. In fact, I suspect they're going to be pretty piss poor. So that part is not going to affect the rate cuts. In terms of the CPI, that's more tricky. The best case scenario is that Trump kind of admits that he made a mistake with the tariffs, basically like takes back all the reciprocal tariffs before the Supreme Court rules. So then when they don't have to rule and we don't have to pay back the tariff money that we already got, he just cancels the tariffs. If the Supreme Court rules against him, still good for the markets because we get rid of the tariffs, but we'll have to pay the tariff money back, which would be kind of a Hbar. But I don't think Trump is going to take back the tariffs because he thinks that the Supreme Court is in his favor, which it is, but they don't always rule for them. And knowing Trump, he would rather start a nuclear war than ever admit that he was wrong. So that is much less likely to happen. I still hope the Supreme Court rules against him. And I think there's good reason to believe that they would, because even though Alito and Thomas are more or less rubber stamps on the Supreme Court for Trump, Kavanaugh, the Chief Justice, and Barret don't always vote in his favor. They definitely favor him the majority of the time, but a lot of times, like when his arguments are so off kilter, they do vote against him. And you've seen a lot of those 6-3 or 5-4 votes against Trump. And I definitely think that the tariffs may be that kind of case because even though Trump says his tariffs are really popular, the Supreme Court justices actually know the public sentiment. People don't like the tariffs and they want them gone. And that's definitely not helping Trump's approval rating. So in a roundabout way, declaring his tariffs illegal actually would help his approval rating because I think that would be the best for the economy right now. Don't really know how they're going to rule though, and that ruling is probably going to come before November. If basically the ruling is stay the course, CPI most likely will go up, and I don't think hiring will improve. So hopefully the CPI doesn't go up too much before October so we get another rate cut. So I do expect the interest rate to go down to 3.5 by the end of this year. Jerome Powell has telegraphed that, and unless something significantly changes, that will probably be the way things work out. So I am definitely looking forward to that. That will get some money to move in from the bond markets to the crypto market, and that should boost us up. So the ETFs, we all know, come before the next rate cut on around October 16th. I do think there's going to be some inflow of money into the market, especially if there are any staking ETFs. I think the Solana staking ETF has played very, very well into its price, and I expect Solana to go to a new all-time high within the next month. BNB obviously is constantly making new all-time highs, so we don't really need to talk about that. But as you can see, we didn't really have a big dump, at least not as the time of this recording, post the Fed announcement. So people saying like buy the rumor, sell the news, probably not going to get to sell the news. And if you actually sold out because you thought there was going to be a big dump after the FOMC, I think you're going to be wrong. I mean, if you buy back now, you probably don't lose much / haven't lost anything at all, depending on when you actually sold out. But we're in the upper 110,000s. And I do think we're going to go up. Just looking at the technical analysis, I see the MACD is positive on the day. The weekly MACD is about to turn positive. The 50 MA is closing. We're closing above the 50 MA, and the signals actually look really, really good. So I definitely think overall this Fed announcement was positive, mainly because of the signal of 2 more rate cuts, bringing the rate down to 3.5. Now, I do think inflation will actually really kick up after a month or two. So like hopefully we get the rate cuts in October and December, and then inflation kicks in, because if it kicks in before then, we might not be getting those rate cuts. And that dual thing of having inflation and also having the rates much lower will definitely help crypto, because the bond yield then will not be able to keep up with inflation, and people will have to look for higher yield products like crypto and stocks, and that could definitely force more money into the market. It's painful for America, but it's good for crypto investors, because let's be honest, the only real way you can beat inflation is by making more money than the inflation affects you. Like, you have $1,000, you turn that $1,000 into $100,000, boom, 5% inflation, no longer a problem for you. So I think in that kind of mentality, people will actually be coming into crypto and more risky stocks, which will definitely help our market. Now, if we start going down in January, I definitely think you want to sell at that point, because although I do think there is going to be a second pump in May, I definitely think there's going to be a big, significant dip, like a really, really big, significant dip. A really big, significant dip, like probably between January and May, because I think Powell will actually stop cutting after 3, and then inflation will actually start kicking in at that point. And then people will get more unsure about the economy. We're going to have more layoffs. And I don't think Powell's going to cut fast enough to actually make crypto basically keep up pace with the bad economic news. So I would actually sell out in January in that situation, maybe buy back in March or April, right before Trump's Fed guy comes in. Once his Fed guy comes in, if Trump is going to want him to invigorate the economy, if it's really that bad, and he's going to cut 3, 4, 5 interest rate cuts at a time. Now, do I think this is actually good for the economy? No, I think it's terrible for the economy. But that might not actually matter all that much. And hear me out on this. It might not actually matter all that much, mainly because we'll have already had our pump by then. So like before the second round of cuts really triggers inflation up to maybe 5 or 6%, I think we can get a second bull run. And by this time next year, or like really by June or like July of next year, you should be selling out under that scenario. Now, I'm assuming Trump is going to appoint a yes man, just like he appointed yes man to all the other positions. I'd be kind of surprised if he actually didn't. Maybe he'll appoint someone and they're not really a yes man. They're just saying they're a yes man to get the position. That's always possible. Maybe he'll try to fire him and that will cause more chaos. But chaos is kind of like Trump's MO. And there's going to be a lot of it, and I think people have already grown accustomed to chaos under our current commander-in-chief. So I really wouldn't be too worried about that kind of chaos. So yeah, there's a lot of like things actually going on here. A lot of things a lot of moving parts and pieces. But overall, like I'm very pleased with the rate cut announcement today by the mighty Jerome Powell. Very pleased that he's going to cut twice more by the end of this year. I think like basically all but one Fed commissioner is with him, and that one Fed commissioner wanted more cuts, but even the other Trump appointees on that board did not vote with her in dissent. She wanted 50 basis points this time, and then like 3 or 4 more cuts after this time, which was more or less a pipe dream. She's obviously basically doing whatever Trump wants her to do, and basically like that's going to be accelerated rate cuts, which at this point is not going to happen. So right now, I definitely think we're still basically set up to be maybe 138, 150 by the end of the year. I expect many of these altcoins that haven't pumped yet to double or possibly more by the end of the year, and that'll be really good ROI. I expect interest to actually go up in the market, and I expect a dump maybe January, February, and then maybe a second pump in May, June. So that's kind of how I'm actually looking at the market. If you have, let's say, like coins, if you actually have a lot of coins, you see a massive pump towards the end of the year, I would sell out maybe soon after the new year, maybe even before the new year, and then buy back in if it really dumps like in February, in like March, April, and then get that May run and then be out by next summer, and then wait for the economy to flesh itself out, which might take another year or so. But I would definitely pay a lot of attention in that bear market starting next summer, because that's when you get a lot of those good deals. And yes, there's going to be like meme coins that come up like even during the bear market, but I definitely wouldn't play the meme market while like the bear market's going on, because so many more meme coins are going to die than actually come out of that mess. If you're in NFTs, I'm sure like with the rise of the market, NFTs will actually rise up too. So like I think like January, February would actually be a pretty good time to get out of your NFTs. You see any of those collections spike in price, it's probably time to sell that collection for some profits. Do I think Bored Apes Yacht Club or crypto punks are going to reach their former highest price? Probably not, but they probably can still reach a high price where you can actually sell out and make a decent amount of profit from the punks in those collections. And I'm sure there'll be some rich people that got really rich off crypto that are going to try to collect those type of NFTs. So you'll have a chance at that as well. So yes, good props to Jerome Powell for finally cutting the rate. That releases tension on some markets. The Dow actually went up right afterwards. It dumped down a little bit, but I think at market close, we're definitely pointing upward. The regulations are pointing upward, and the SEC has struck again because they basically are making standardized rules for crypto ETF approvals, which will speed up the time and type of the approvals. So I definitely think that going to the end of the year, we're going to 150,000 plus, or at least somewhere between 135 and 150,000. So you should gear up for a pretty big run. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.